Whatever you think of Bill Gates, one thing is true. He is a pretty intelligent guy. He's intelligent in business, but also he's an intelligent investor. When he was young, he became friends with Warren Buffett and followed his stock market strategy of buying good companies at low prices. Gates has been buying more stocks as the stock market has fallen last year. We can't view his personal holdings, but he's legally required to reveal his Bill and Melinda Gates Foundation trust stocks. He acquired 13 stocks using the trust last year, but just 5 represented major portions of his portfolio. So, we are going to focus on those. The others were all below 1%. Watch till the end to learn about the 5 stocks Bill Gates is buying even when the stock market falls. Stock number 1, Microsoft. Now this is very interesting. His biggest stock was his own company, which he started a long time ago. Even now, he is still buying back into his own business. He still buys Microsoft stock even though he sold it during the tech bubble in the late 1990s so he could buy other stocks and spread out his portfolio. He is now buying that stock again. Bill Gates is still bullish about Microsoft, even after it went up over 200,000%. Let's recognize that Bill and Melinda Gates' Trust Chief Investment Officer probably makes most of these decisions, but Bill Gates did recruit him, so it's expected that they both discuss the kind of investments that the trust will buy. Microsoft is currently the second biggest company in the world. It is worth just under $2 trillion, and like all stocks, its price has gone down in 2022, from $336 to $240. It pays a dividend of 1.1% and has a price-to-earnings ratio called the PE, which for Microsoft is 25, which is a little on the high side. However, Microsoft fundamentals tell a different story, even though the price is going down. No matter if there was a pandemic or not, both revenue and earnings went up every year. It seems like this company can't do anything wrong, and this is probably the big reason why the Gates Trust is buying, since the price is down, but the fundamentals of the company still look good. Stock number 2, CN Railway. The Canadian National Railway was his second biggest recent purchase. He has owned this stock for a very long time, but he is still adding to it. Because of its long history, since 1919, many investors now consider this as a traditional value stock. Its business plan was based on shipping goods all over North America, goods that are needed to keep the company going and an industry with very little competition. CN is not likely to lose much business in the foreseeable future because no one can simply go and install thousands of miles of track across America like they have. Warren Buffett would say, "It's a beautiful moat." At the moment, each share of stock costs $160. The PE ratio is a little lower than Microsoft at 22, and the dividend yield is a little higher than Microsoft at 1.8%. But if you look at the revenue and earnings, the picture is okay. But it is not up there with Microsoft. They have just been slowly bringing in more money and keeping their earnings steady. Stock number 3, Berkshire Hathaway. Since meeting in 1991, Gates and Buffett have become pals. The legendary story of them meeting and chatting business until they both concluded that their absolute focus was their key to success. Gates founded Microsoft, the second largest company by market valuation, and Buffett runs Berkshire Hathaway, the 6th. Gates admires Buffett, both as a close friend and also as an incredibly smart investor. That's why he invested in Berkshire Hathaway. It was his third largest acquisition of 2022, at 9.3% of his portfolio, and is currently his second largest stake at 23.3%. Berkshire Hathaway has always been one of many investors' favorite stocks, and it's run by 2 of the greatest investors of all time, Warren Buffett and Charlie Munger, who built an amazing portfolio of both acquisitions of entire companies and shares of companies over the years. If you buy Berkshire, you get to own all of these great businesses. These 2 geniuses are still in the driving seat, making future stock investments. It was smart of Gates to buy this stock years ago and to keep buying it. Berkshire hasn't dropped in a year, which is intriguing. It cost $299 a share a year ago and $308 now. When the market falls, smart investors buy stocks with reliable business structures. Berkshire doesn't pay dividends. Their market valuation is $680 billion. Ignore the PE ratio as well. This year's write-off of irregular net investment income skews it higher. Smart analysts should focus on the forward PE of 21. which better reflects their earnings. Gates keep purchasing Berkshire because it's a solid business selling at a fair price. Stock number 4, Waste Management. Waste Management comes in at number 4. This is another stock that Gates likes to buy and buy. It's not a pretty business. In fact, it's pretty ugly. Although, considering that Waste Management gets rid of waste, it could actually be said that the country would be pretty ugly without it. It is a North American company that serves almost 21 million people in the United States and Canada. This includes 346 transfer stations, 293 active land-based disposal sites, and 146 recycling plants. The business is doing well. It's a good business to have. The entire North America needs it. Even if there is a recession, this business won't go away soon because people still need to get rid of their trash. Waste Management is another stock that has held up well during the stock market crash. It's sitting at a price that is almost the same as it was a year ago. It has a price to earnings ratio of 28. This is pretty high for a stable company with low growth. Also, it actually pays a small dividend just like most of Gates' stocks. Stock number 5, Deere and Co. Deere and Co was the final stock that Gates bought, and it was the only one that added any meaningful weight to his portfolio. This was equivalent to 3% of his total holdings in his portfolio. Once more, we are going to be straightforward here. It is a pretty boring corporation with a solid foundation and a straightforward approach to doing business. They produce practical outdoor equipment such as tractors, lawn care equipment, construction equipment, forestry equipment, and agricultural equipment, among other things. The price of their stock has actually increased over the past year, in a manner that is completely different to the market. It's gone up from $342 to $420. So, these stocks have done very well in 2022. They have mainly held their prices with the exception of Microsoft, although we cannot say the same thing for the rest of the stock market. It is clear that the strategy for the Gates Foundation Trust in buying conservative business like Microsoft, Berkshire, Canadian National Railway does indeed seem to be working well. These are well-established, successful businesses that have existed for a very long time. Even if more recessions occur, they have fixed goods, fixed consumers, and enterprises that will not vanish anytime soon. It's a sensible strategy to invest in them, and Bill Gates need not worry too much about the state of the overall economy because he owns high-quality, recession-resistant businesses. You have just learned about the 5 stocks Bill Gates is buying even when the stock market falls. We're going to wrap things up here for today, and we hope you enjoyed the content of this video. If you want more information on the tips to make the most out of your money, check out our other videos on the screen. Thank you for watching.